Gold is one of the most traded commodities in the forex market, but trading at the wrong time can mean missing profit opportunities or getting caught in unpredictable price swings. Gold is unique. Unlike currency pairs, gold reacts differently at various times of the day due to global economic events, institutional trading, and market sentiment. So for traders in South Africa, timing plays a crucial role for maximizing gains and minimizing risks. The forex market is open 24 hours a day, but not all trading hours are equally profitable. Some trading hours bring high volatility and liquidity, while others are slow, come with wider spread, and unpredictable price movements. The best trading window often comes when major markets overlap, creating the strongest price action. This video will cover the best and worst time to trade gold in South Africa, how different forex sessions impact gold prices, which market overlaps creates the most profitable opportunities, and key global events that move gold and how to take advantage of them. By the end of this video, you should have a clear roadmap on when to trade gold in South Africa to get the best results. So first, let's see understanding gold trading in forex. Gold is not just another asset. It's a safe haven commodity. This means that traders and investors turn to gold whenever there is economic uncertainty. Unlike traditional currency pairs, gold follows a unique price movement pattern that is influenced by global events, economic policies, and market sentiment. Now, why should you trade gold, or why are other traders trading gold? First, gold is a safe haven asset, like I mentioned before. During financial crisis or market instability, gold prices tend to rise as investors move their money into safer investments. Another reason why you should trade gold is because it has high volatility and liquidity. Gold experiences significant price swings, making it ideal for traders looking to capitalize on short-term movement. Thirdly, gold often follows well-defined trends, making it easier to analyze and trade compared to some currency pairs. And finally, gold has an inverse relationship with the US dollar. When the US dollar weakens, gold prices tends to go high and vice versa. Now, to help us understand gold in forex, let's also see how gold moves in the forex market. Gold is priced in USD. This means that any movement in the US dollar impacts the value of gold. Now, there are several factors that influence gold price action, and some of them include the US economic data. This includes reports like the non-farm payrolls, consumer price index, and interest rate decisions from the Federal Reserve. Global geopolitical events. Global geopolitical events also influence the value of gold. Wars, trade conflicts, crises can drive the demand for gold. And then stock market trends. When stocks decline, traders often move their capital into gold, increasing its prices. Understanding these market forces can help traders determine the best time to enter and exit gold trades in South Africa. Now let's also see key market sessions and their impact on gold. Like you should already know, the forex market is open 24 hours a day, 5 days a week, but not all trading hours offer the same opportunities. Gold price movement varies depending on which global financial centers are active. Understanding how each session affects gold can help South African traders maximize profit and avoid low liquidity periods. First, let's see the Asian session. This session is open from 12 a.m. GMT to 9 a.m. GMT, and this is around 2 a.m. to 11 a.m. South African time. This session is characterized by low liquidity compared to other sessions. Gold tends to consolidate rather than making big moves. In this session, market activities are driven by Japan, China, and Australia, which have less influence on gold compared to the United States of America and Europe. The Asian session is best for long-term traders looking to enter positions at stable prices. Now let's also see the London session. The London session opens at 7 a.m. GMT and closes by 4 p.m. GMT. In South Africa, it opens around 9 a.m. South African time and closes around 6 p.m. South African time. The London session is characterized by increased liquidity as the European markets open. Gold often experiences stronger price movements during this session, and economic data from UK and Eurozone can cause short-term fluctuations in gold prices. The London session is ideal for swing traders and trend followers. Let's also see the New York session. The New York session opens around 12 p.m. and closes by 9 p.m. GMT. In South Africa, it opens by 2 p.m. and closes by 11 p.m. The New York session is the most volatile session for gold. Gold reacts sharply to US economic news, Federal Reserve decisions, and stock market trends. This session is the best time of the day for traders and scalpers looking to make quick profits. You may want to keep in mind that gold's price action tends to be the most aggressive in this session. Each session plays a different role in gold's price movement. However, the best opportunity comes when major markets overlap. This brings the highest liquidity and price actions. Moving forward, let's see the best overlapping sessions for gold trading. Like I already said, the most profitable time to trade gold is when major markets overlap. This is when major markets are open at the same time. When we say major markets overlap, we mean that major markets are open at the same time. If you are yet to understand Forex trading sessions properly, then you may want to see our video on Forex trading sessions. I could leave a link to that video in the description below. You also want to visit our products for Forex traders called mytradingland.com. This product is where you can find a community of traders who you interact with and just pick their brains to know what they're also thinking. And we also have educational materials in text form and video forms on mytradingland.com. It's free of charge, so you don't have to pay a dime to access these resources. And on that note, you should also subscribe to this YouTube channel and turn on bell notifications so when we drop more educative videos like this one, you can get notified. But let's continue with the video. When major markets overlap, there's always high liquidity, tighter spread, and strong price movement, making it ideal for traders who are active. Now let's see when major markets overlap in South Africa so you can know the best time to trade gold. First is the London and New York session overlap. This overlap happens between 12 p.m. to 4 p.m. GMT. In South Africa, that's around 2 p.m. to 6 p.m. The London and New York session overlap is the peak trading hours for gold. This overlap sees heavy market participation from banks, hedge funds, and institutional traders. During this session, gold experiences rapid price movements, providing excellent opportunities for day traders and scalpers. Also, the US economic data released during this period significantly impacts gold prices. The next session you want to be on the lookout for is the New York and Asian session overlap. This overlap happens between 9 p.m. to 12 a.m. GMT. That's from 11 p.m. to 2 a.m. in South Africa. This session experiences low liquidity compared to the London and New York session overlap, but it is still tradable. The New York and Asian session overlap is good for traders looking for price reversals before the market slows down. It can also be useful for swing traders setting positions for the next day. Now for South African traders, the London and New York overlap is the best time to trade gold because this overlap brings with it high liquidity, high volatility, and strong price trends. However, those who prefer less volatile markets can look at the New York and Asian session overlap. Let's also discuss factors that affect gold's volatility. Now you want to trade during periods of volatility and high liquidity because that's when price can move and you make profit. So what are the factors that affect gold's volatility? You want to keep these factors in mind. You should keep in mind that gold is one of the most volatile assets in the Forex market. Its price movements are influenced by a combination of geopolitical events, economic data and policies, and market sentiment. Understanding these factors can help South African traders anticipate price swings and trade effectively. First, one of the major economic data that influences the price of gold is the US economic data. Since gold is priced in dollars, major US economic data releases influence the price of gold as well. The key reports to watch out for includes the non-farm payrolls. This is released on the first Friday of every month. It can cause sharp spikes in gold prices. High inflation tends to push gold prices as investors look for a hedge against a weakening US dollar. You also want to be on the lookout for the Federal Reserve interest rate decisions. High interest rates makes gold less attractive, while lower interest rates increases the demand for gold as safe haven. Now let's see how geopolitical events affect gold's volatility. Gold is often called a crisis asset because investors buy gold during periods of uncertainty. Gold's volatility is affected by events like wars, political instability, or global conflicts. It's also affected by events like the US-China trade dispute or economic slowdowns. Also, you want to keep in mind that stock market crashes pushes investors away from riskier assets, and since gold is considered a safe haven, investors will turn to gold to buy gold during stock market crashes. Now, the strength of the USD and inflation in the United States of America also affects gold's volatility. Like I said earlier, gold and the US dollar have an inverse relationship. When the dollar strengthens, gold prices fall, and when the dollar weakens, gold rises. Inflation also plays a key role. Higher inflation in the United States of America also leads to increase in the price of gold. Lastly, stock markets and risk sentiment influences the price of gold. When the stock market is booming, investors prefer equity over gold. But during economic downturns and recession, the demand for gold increases as traders seek stability and safer investments. For South African traders, keeping an eye on these global factors is crucial. Checking the economic calendar before trading can help avoid unexpected price swings and can help you make more informed trading decisions. On mytradingland.com, there's a free economic calendar that can help you stay updated with recent economic and global news that may affect the volatility of gold. Like I said, this economic calendar is free of charge. Just visit mytradingland.com and go to the economic calendar tab. Before we bring this video to an end, let's also talk about the worst times to trade gold in South Africa. You want to avoid trading gold during periods of low liquidity and volatility. This is usually around the early hours of the Asian session, around 2 a.m. to 7 a.m. in South Africa. Keep this in mind. If you do not have a solid risk management strategy, you may also want to avoid trading gold during major US news events. When major US economic data is released, there's usually a spike in price. And if you are unable to properly manage risks, you may want to avoid trading entirely. Trading gold successfully is about trading at the right time, understanding market conditions, and managing risks effectively. So in conclusion, gold is highly profitable, but timing is everything. As a South African trader, you must align your trading hours to periods of high liquidity and volatility so you can take advantage of strong price movement. We really hope you found this video helpful, and if you did, let's know in the comments. If there are also topics you want us to cover, let's also know in the comments. And don't forget to subscribe to this channel and turn on bell notification so when we drop educative videos like this that are helpful for you in your journey to become a pro forex trader, you can get notified. Thank you.